Welcome to this week's Cattle Call. I'm Susan Littlefield. Lots happening this week, including some positive feels when it comes to this cattle market. Yeah, you don't have to adjust your screen or turn up your volume when I say we've got some positive things happening within the cattle market today. We're going to talk about better kill that's going on. Also, the discussion that's been going on with Tyson when it comes to vaccination rates. We know that has been taking place, and I thought it was a November 1st deadline, but Brad, you'll correct me if I'm wrong. As you can see, Brad Kooima is joining us. He's with Kooima and Barlock out of Sioux Center, Iowa. So let's start out. This cattle market took a nice turn on the week.
Futures have acted much better this week. In fact, the lead month, October, made new 3-week highs here this morning. Not by a lot, but by a little. And in any more these days, we'll take whatever we can get. I thought, you mentioned that in the run up here, vaccination rate. Corporate Tyson announced earlier in the week that they are now at a 91% vaccination rate for the employees. And I agree with you. I think you are correct that November 1 is the deadline. So if you are unable to provide proof of vaccinations, I guess that's the threat anyways, that you can't enter the building. I think that the market, thought that 91% was better than expected because we actually rallied on that news. And so, they've been doing a pretty dismal job of getting cattle harvested anyway. And you're going like, well, if they're getting 3,500 dead a day at Dakota City when the capacity is 5,500 to 6,000, seems like maybe things would get better even if the vaccination rate was only in the high 90s. So I think that's what the market looked at. I'm sure there's some Tyson official that's grinding his teeth, but it is what it is. This whether it's absenteeism or whether the whole cultural system, which is crappy right now, where people, get paid more to not work than to work. But the reality of it is the person that gets punished is the cattle producer. So I'm a little bit optimistic. The slaughter rates on that topic have been much better this week. 122 yesterday, 121 today. That's what we need to do to get through this little bubble of cattle, which I really don't think is a big bubble either, Susan.
Well, and you don't want to get political in this whole vaccinate, not vaccinate thing. But like you said, for the cattle producer and what we went through in this last year, knowing that maybe they can keep up their normal runs as we get back into the colder weather, there's got to be some optimistic news for those producers.
Of course. And, it doesn't pay to get into the political dialogue about what it is. The reality of it is until we can get a little bit of leverage, until we can get a capacity here back to where the packers are killing full blast. And honestly, why wouldn't they? They're making $1,000 a head. Then we can return some of the leverage back to the producer, and the packer will be forced to share part of that big margin. The other side of that, of course, is the consumers getting taken advantage of too. So I think, though, as the awareness has grown in circles, including Washington D.C., I think that your audience might be surprised to hear that we may be closer to hearing something out of that than what you might expect. So let's hope that you and I can talk about that very soon.
As I say, you're going to leave us with a little nugget for going into next week.
Cliffhanger.
Yeah, cliffhanger, exactly. So you talked about where we're at when it comes to slaughter rates. And obviously, we're starting to see those slaughter rates move up and getting some nicer kill numbers. So at least we can keep the consumer side of the demand hopefully going. And maybe with some better slaughter, we're going to see some better cash.
Well, kind of two parts to that question. On the demand side, I continue to cringe when somebody tells me they're worried about demand. Demand's outstanding, both globally and domestically. Now, would demand be better if they didn't, try to gouge these consumer with the $24 ribeye? Well, of course. And I know there's been even a couple of instances, I should say, where we've had some of the big box retailers actually lower some of their prices as they finally found a spot of consumer resistance at some of these extreme high prices. Now, which it just makes me want to, makes my stomach hurt because I got $1.22 for cattle this week, last week, the week before, forever. And, never really got, as did everyone else in the North, and never really got to take enjoyment out of any of this, the record demand that we just experienced. Now, speaking of all, get back to what you asked me. Demand's fine. What I expect is going to happen next is that the high price part, the rib cut, is going to go up, and the boxes are going to stop going down. And by the end of October, I think the boxes will put on several dollars. That's not the first time that happens. It's also not the first time that you would expect cash cattle to start to firm up in October as you get through that cyclical, bulge in the numbers that the North have, which I believe, by the way, are overstated. This is where I live. This is what I care about. We've got less numbers here than we did a year ago and the year before for this time of year. It's clear to us that the USDA has a little struggle with counting numbers anyway, whether it's hogs or soybeans, right?
Yep.
So as to your question on the cash, before, I know we're getting long here, but I did want to bring up that I thought this week's cash is different, even though it's the same price. I think I was bid 122 by 4 different outfits. Okay. I had the opportunity to sell cattle to 3 different packers last week. The South, where it used to be, 124 from one particular packer, especially, and always on a very limited basis. I think Kansas has traded over 10,000 cattle today at 124, and 3 of the 4 majors are participating. We're throwing a much bigger stone into this pond today. I think I like the action of what's going on. It can't happen soon enough, and it may not change super quickly. But I'm an old guy. I know that the difference between too many and not enough is a tiny, tiny, tiny bit. So I like what we're doing. Let's hope here by the time we talk again next week, we're talking about a little better cash market.
All right, as we wrap this up, charts seeing some firmness. Are we going to see that continue into the next week for the cattle?
Well, I'd like to think so. The chart thing, of course, is we've wrecked the open interest here, took it all the way back down to where it was before we had that rally in August. And people are concerned about that. To me, it means that you've got some buying power on the sidelines. You got some dry powder, as it were, from the fund community, from the large technical spec. Now all we do is got to just turn this market enough to get us to give them a reason to buy it. And now you'd say, well, where is that, Brad? I think December. Sorry, I'm looking at my chart book up here at the same time. A close above like 129.40 on the December would probably be enough to do it. And that's only 100 points away or so. I think as these charts turn, you'll get the open interest to come back. I saw no justification for the $14 sell-off myself. So we should at least get half of that back here and soon.
All right, sounds good. Looking forward to the cliffhanger of next week. And hopefully it doesn't get pushed back another week. But it is Washington, so anything can happen.
Yeah, don't hold your breath.
All right. Thanks so much. Brad Kooima has been joining us for this week's Cattle Call. Just a reminder, commodity futures and options involve substantial risk of loss. They're not suitable for all investors. And that's the Cattle Call. I'm Susan Littlefield here on the Rural Radio Network.